Who's playing on this week? All right, we're live. Welcome back, Dispatchers. This week, we know more of you are going to be watching because you can't afford to drive anywhere. The fuel crisis is raging in Australia. If you can get fuel, you're paying through the nose for it.
Yep. Well,
what does this have to do with crypto? Well, lots, because the macro things make a big difference for Bitcoin. But despite the war starting and fuel prices going crazy, Bitcoin is traded like a stablecoin.
Yeah, it's pretty true. I think we spoke about this last week. It's holding up pretty well considering if you look at sort of, and I should have got a chart up for this, but if you look at the like the SPX over the last few weeks, it is looking bad. Like it's just in free fall at the moment, kind of thing. So yeah, I think we're doing pretty well considering. I've said this same thing week in, week out. It starting to feel a bit like hopium. Like I'm just sitting there praying that what I'm saying is right. But no, I don't know. Well, as long as we stay above 60K, and I'm not saying we will forever. Like a lot of people are calling for sub 50s. Sub 60s in the 50s, and even sub 50s actually. But at the moment, you know, we're in the 60s.
Well, the big question is, are the lows in or are they coming? Now, I've gone back and had a look at some previous cycles. I've got no price predictions, but I'm going to talk about some themes that have emerged through every cycle, and we're going to compare and contrast.
Cool.
That's our mission for the day. Now, if you're looking for some good news, I don't know if I can give it to you because here's some random sort of factoids. 40% of all the altcoin market, wait, did I pronounce that correctly? 40% of the altcoin market is plumbing all-time lows.
Yeah.
Now, that's diabolical. 40% of your bags, of your altcoin bags, near all-time lows, not catching a bid. Now, there's no hopium in that whatsoever, other than it can't get worse, surely.
Yeah, like you can't go below zero. So
well, I didn't say all-time lows. I didn't say zero. I just said all-time lows. There's still room to go down. New lows are waiting in the winds. But look, you know, Bitcoin has been holding remarkably steady. Now, we talk every week about some of the various narratives that pop up around Bitcoin, and I'm going to go back and throw a few narratives at you that have come and gone in different cycles. Like I said, we're going to see how this goes. But let me quickly wrap off the rest of the summary. So, there was a little bit of action this week, a little bit of a sell-off this week. We unfortunately, depending on how we go today, if we're just a little bit further down, we might see 6 months of red.
I think actually at the moment, sort of over the last couple of hours, we've had a little rally. So we're up above 67K from last time I looked, which I believe means we're in the black. But you know, we still got
fingers crossed.
How long? Like 15 hours to go or whatever it is. So
just don't look. Just pretend this is the end. All right. Well, a quick bit of market summary then before we talk about whether the lows are in. Bitcoin finished this down week, unfortunately, a little bit down 5.5% off the back of some selling to do with a leak about Anthropic Claude's Mythos model, which reportedly can find zero-day exploits in code that people previously thought was fairly secure.
Yeah.
Claude's pretty crazy. We can definitely talk about Claude. Everything else, while Ethereum is down 5.4%, RIP. Tom Lee. Ripple lost 7% despite announcing it was joining the new cross-border program, trade finance scheme in Singapore. I think we've talked about it before, the connection between the cross-border payment scheme and XRP. It's becoming an interesting connection.
Well, this is not XRP. This is RLUSD actually.
Yeah, but RLUSD wasn't down. XRP was down.
Of course not. But my point is they're not using XRP as part of this.
That's what I was alluding to. You've got to keep some mystery. We're going to come back to that. I
Okay,
guess not, because you've just blown up.
We're doing a bunch of talk bait. Is that what it's called when we were on a podcast?
Not anymore, because you just gave it away. Why buy the cow when you're getting the milk for free? Solana is down at 10%. And your favourite analyst, my favourite analyst, Joe, everyone's favourite analyst, Ted Pillows, was noting that Solana treasury companies continue to dump towards new lows. Now, that isn't much of a reason. He just said it. Anyway, Cardano. So last week, Jared couldn't make it because you had food poisoning. Look, Cardano's down now 6.4%. So sorry, Jared. News keeps getting worse for you.
Mate.
I got rid of most of it, to be fair.
He's like emerging from the haze of food poisoning. He's like, as long as Cardano's not down, I'm like, sorry, bro. Put me back into a coma.
Yeah, sorry, mate. Sorry. But thank you for coming along today. We almost didn't get you again because of Yeah, the cold as well, but you're dedicated to the
It's
cause.
in the dispatch.
Yeah, thank you,
Dispatch.
thank you. All right, so that's our weekly summary.
Okay.
How was that?
I wasn't listening just in case I stepped in and said something that you didn't like. So I just turned my ears off.
Okay, good. I know the feeling. Are we going to talk about quantum computing next? So, is the bottom in? This is the question. Okay, so here's what I want to talk about. We talk about themes, and like Bitcoin right now. I don't know what the major theme is right now, and it's a little bit confusing because let me run over some themes from bygone past. So, the initial thing with Bitcoin is it's like, it's uncontrollable money, right? This is the early sort of crypto thing. This is pre sort of 2000, right? Hey, Bitcoin's is new.
Pre-2000.
Pre-2020,
Damn.
sorry.
You were in early. I
Sorry.
forgot how early you were.
I'm just getting too excited to get through all the I'm losing my words.
Go on.
Pre-2000, the narrative was all around Bitcoin is going to be...
Pre-2010, just for those listening.
One more time.
Pre-2020
Pre-2020.
maybe?
Yeah, there's too
okay.
many 20s in there. I was getting
Alright.
confused. So pre-2020, what was the theme? It was all like, hey,
Yeah,
Bitcoin,
uncensorable.
uncensorable, you can't stop me, hey, I'm all free.
Etc. Sure.
2020 to 2021 came along, and one of your favourite anonymous ex-posters, stock to flow. It all became about scarcity-driven,
Yep. Okay.
right? It was all about scarcity.
No,
Yeah,
that
stock
was
to
definite
flow.
theme.
It was a definite theme. Move on to 2022, 2023. All of a sudden, interest rates started going on. We're like, money printer go burr. It's all about inflation. Look at this inflation hedge we got here. Can't stop me because, 21 million Bitcoin. Fast forward just 1 year. In fact, I feel like the themes were getting quicker. 2024, it was all about M2 liquidity. You remember this? Yeah, it's just trading global liquidity. That's all it is, right? So we've had, what are we up to? Four different narratives now. ETFs come along, all about the macro, man. Macro is all that matters. It's a risk asset, trades blah 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 blah.
Institutions are
Institutions are who, right?
here. Okay.
Yeah, okay. Now, in amongst that, because I don't know exactly when this thing, gold's now digital gold. I reckon that was kind of like started weaving
Bitcoin's
its
now
way.
digital gold.
Bitcoin's the new digital gold. Sorry, I
Yeah.
probably said something weird because I'm too excited about these narratives. Bitcoin is the new digital gold, man.
Yeah.
Right?
I feel like that's been
it's a
a
safe
long-
haven asset, man.
Yeah, there was a period where it kind of flipped because originally everyone points to the Bitcoin white paper where it says, peer-to-peer cash, like it specifically calls out peer-to-peer cash like system, and then everyone who's calling it digital gold is like, no, it's not digital gold.
Yeah.
We're here to spend it. Let's get the merchants involved. And then it turns out like it's just digital gold. We can't get merchants on board.
We
But
can't-
there's a we can segue to
Are
something
you
about that
baiting
later.
people, Nick?
Am I debating?
I said, are you baiting people with
Baiting.
some talking points? Some
Well,
talk
maybe.
bait.
I'm trying to fix my prior mistakes.
Okay, move on to 2026, right? Safe haven asset. A hedge against currency risk,
As of the last month or so, yeah.
right? So which one is it, Nick? You tell me.
Why can't we have both?
There's a lot of narratives in there.
Yeah, there is, and I think they're all directionally true. I just think everyone jumps on the narrative that is most likely to get them the clicks and the likes on the social medias, and that's really like what's driven our culture, especially like the crypto Twitter and the crypto sort of scene is hugely driven by these social media narratives that you kind of described, and people will say whatever gets them the clicks and whatever sort of seems to make the most sense at the time because of what's happening externally. I think it's an interesting point about the M2 money supply. Like a lot of these ones not necessarily have been proven wrong per se, but they're just kind of fallen out of the zeitgeist, and people now talk about other things that get them more clicks. But I saw an interesting thing the other day, and I should have got the graph for this to show you guys. But you might have seen the previously with the M2 money supply, you could track the Bitcoin pumps with the M2 money supply pump. So as more money got thrown into the system, which is kind of the same as the whole printer go brr thing, you could watch Bitcoin just follow it, and there was a lag, but it was fine. Anyway, that has vastly diverged recently, where the M2 money supply has continued to go up and the Bitcoin price has not done so. And a lot of people are sort of, retrospectively calling it a scam and going, oh, you guys all believed that M2 money supply thing? Which is just the same as the stock to flow stuff, right?
Yeah.
Everyone when stock to flow is like, sort of diverged from the graph that it was supposed to follow, a whole bunch of people came out and was like, well, I can't believe you idiots all believed that. And to be fair, there was a lot of people who was calling stock to flow, a farce basically earlier than it diverged. But it's easy to see sort of when people get noisy about something that they claim posthumously basically. So now we're in a period of we're returning to the digital gold narrative. I feel like because gold has been a store of value for so long, and now we're beating gold for once, which is so easy to expect considering gold has had this astronomical run. It shouldn't surprise anyone that Bitcoin or anything really can beat gold if you cherry pick the start and end dates kind of thing.
Yeah.
It's good to see these macro conditions like this war going on, sticky inflation. No, it's good to see in these macro conditions, not these macro conditions. When some really bad stuff is happening exogenously, that Bitcoin is kind of just clinging in there, holding on, and doing better than a lot of other asset classes. Now, what's the next? I assume your next question is what's the next narrative? Which, of course, I know, but will I tell you? Yes.
Well, maybe you can start the next narrative.
It's obviously going to be quantum, so... Shall we get deep into this?
Sure. So we came up, actually, during the week, we came up with an idea for you to do your own podcast, which is purely just quantum computing.
Yeah.
How many...
What are you laughing
if there's
at,
enough,
Jared? Why are you laughing?
There's another universe where I'm not.
But it's not this one. Yeah, I went on a little rant, so the power went to my head, and I decided I didn't need anyone, including Jared, to run my own podcast and be way more successful than you guys. And I've slept on it, and I've decided to come back. So
well, yeah. You, we didn't pack up your room, if that's the case. You're worried about Nick. We left it just as you left it.
He'll
we
be
kept
back.
it just as you left it. We knew you wouldn't be gone too long.
So Skynet says Bitcoin was designed as P2P cash, and a security model was designed for it to move to enable transactions to replace subsidies. If it doesn't increase in transaction fees, eventually dies. Yeah, this is like the security budget
the question, right?
Issue that doesn't affect us right now, but it's coming, and it's something I've often spoken to, like anyone who I speak, like who I interact with, who seems to have a good technical and economic understanding of Bitcoin. It's one of the first things I bring up is like, what are your thoughts on the security budget? Even though it's nothing that will necessarily affect us right now, for such a long period, you could get a Bitcoin transaction done for 1 Satoshi per byte. It's like the cheapest. You can't go any lower apart from 0. I think at the moment it's a bit higher. Maybe it's like 3 or 4 or 5 or something, but it's still pretty low.
Yep.
So we've got to do something before the reward gets halved away.
Yep. Well, not to give too much talk bait, but we are going to, that is definitely one of the articles raised today, so we are going to cover that off. Let's address a few more questions from the crowd. So Alone Tonight. Well, welcome Alone Tonight. Might be a first long-time listener, first-time caller.
Putting words in his mouth. You've been here the whole time.
Stock to flow may be in question, but how do you feel about the spiral graph? Oh, I know you've got views about the spiral graph. The rainbow graph, right?
Is that what you mean? The rainbow?
Oh, no, the one.
I know what you're talking about.
The one that goes around like that. You've seen the one where it just kind of tracks the price.
No, in circles.
Yeah. If you circle the spiral graph, we can come back.
I don't know the spiral graph. Is this like a meme, like the rainbow chart, or is it a real?
It's like the rainbow chart. There it is.
Bitcoin halving spiral.
And I'm sure you have posted memes about this before, Nick. This seems like a very Nick thing. Have you seen this one before?
I don't think so. So right now, for those who can't see, which is everyone listening to the podcast, we're looking at
Anyway, we'll come back to it once it gets back up. Hang on, we're gonna.
I think it's here. Oh no.
Just talk amongst
Talk amongst yourselves.
Okay, cool.
Anyway,
well, to answer your question, I don't have an opinion on the spiral graph because I don't know it. But it sounds like you know it. Maybe do you have an opinion on it? Is there something you can just talk to us about?
I don't know it well enough to make any comments that are going to be insightful.
Yeah, fair enough.
It seems a bit along the lines of the rainbow graph.
Okay. So the rainbow graph. Why don't we talk about the rainbow graph then? I can talk about that.
Sure.
That's something popularized by Eric Wall, invented by someone else who wasn't Eric Wall, so I don't care about them. And
Did they also stitch you up for a party?
Yeah, probably. That's why I'm really angry at them, and I won't even mention their name. Yes, so the rainbow graph sort of is some kind of like regression, which basically says, the Bitcoin price can't go outside of these bounds, but it's just as nonsense as the supply, the S2F. So, what's the S2F? Supply to
Stock to flow.
Stock to flow. Geez, stock to flow graph. In that, of course, there is absolutely nothing saying that it must remain true. There's no universal law that decides that this is something that has to keep going forever. But it's fun to look at. It's got pretty colours, and it's been true thus far, except that they keep changing it. I feel like there was this rainbow chart for a while, and it was like doing really well, and everyone's buying when it told you to buy and selling when it told you to sell, but then it dipped below the lowest colour. And so they invented a new colour, ultraviolet, put it in there, and they're like, no, look, this is the new stock to flow, and we've changed the model a little bit. Now it's perfectly aligned again. And
well, that's just like modern economics that they teach, really. I mean, every time it doesn't quite fit, they just kind of go, well, we'll put some more lines on it.
Yeah.
Problem solved.
That's literally it. They adjust the model to fit the results, which is not a model anymore. It's just a retrospective kind of look back and.
But people have a lot of comfort in those models. That's the thing.
Yeah,
they go, wow, the model's working. I guess I don't have to worry about it anymore because there's some lines on a chart.
Okay, so here's the spiral clock. Thanks, Jared. You did a lot of work there to get that single image up.
Jared is sweating. He was furiously clicking back.
Can you make it like full screen for us?
Yeah.
Like go back to the other page so we can actually see what it says. So how does this work? Bitcoin spiral, price to Bitcoin block count. I'm guessing each layer is another like epoch, like like a halving happens and then it jumps to the next layer.
There's some pricing as you go out of the concentric circles, and it stays within those bounds
and
roughly.
And each concentric circle is some kind of like log graph log. It increases by some logarithm, I'm guessing. Anyway, that's a cool idea. It does seem very similar to the rainbow graph, in that it'll be right until it's wrong, and when it's wrong, we'll just invent a new spiral graph where it's right again. Sorry. Maybe if does Alone Tonight have any other insights into this thing?
Everyone's moved on.
Okay.
Just except for you, Nick.
Yeah, they're talking about quantum now.
Well, let's move on. All right, so
Yeah, nice.
Nick, is the bottom in yet? Are you prepared to stake a claim? Because you were prepared to do some victory dances.
I staked a claim a few weeks ago, and said the bottom was in, and then we rose up to like the 70s, and I was doing the victory laps. I was like, "We've done it. I've done it, Mum." Anyway, it's now back down to the 60s again. So that we're still above the bottoms that I called, I'll say, but I'm definitely less confident now. I don't know. So actually, Jared, can you pull up my first graph? I wanted to sort of talk about how no, the other one. I want to talk about how we're at that part of the cycle where we see everyone every man and their dog coming in with their theory about what's going on and like a technical analysis and trying to put stuff in front of your face to show you why you should read their articles. So this graph you can see here, sorry, it's a bit, I probably should have zoomed in on the important bit, but this is part of one of the graphs that I was reading the other day, and people are saying, yeah, look, this is why we're at the bottom. So there we go, cut out. Yeah, nice. This is more like it. This is the kind of podcast I was talking about. It's me and some graphs, preferably quantum mechanic graphs, but we'll do with the pricing one. So they've drawn at the top part of this graph. You can see that we've got a blue line that's been broken by the downward price action. Shock horror. They drew a line with 3 touches to a graph, and it didn't maintain its trajectory. And at the bottom, they've got, I can't even remember what the data is, but they're trying to prove to you that this is the bottom. We've hit the bottom because they've got this down. They see the little yellow rounded thing under the bottom graph. That is proposing to us that we're going to bounce from here, and it's absolutely not. If you just look at the data, look at the graph. The biggest downward candle in that thing is the last candle. So how could you possibly claim that we've hit a bottom when rolling? We're on the downward trajectory. This is free fall. It doesn't. So I'm just seeing a lot of this kind of analysis at the moment where people are just throwing together some stuff, and yeah, I don't know. There's a lot of noise to get through. The noise to signal ratio is dire. Anyway, we can get rid of that thing and get Lee back on
Well,
screen.
Well, it was perfect because I was trying to find an image I was just going to send. Now I just look like I'm on my phone, and it was basically the same type of thing. But it was someone had superimposed a price chart graph over the Strait of Hormuz, and showed that it perfectly fit the Strait of Hormuz.
Oh, wow. Okay.
Wow! So there you go.
Yeah.
We have a comment from our sister channel, Buy Crypto Guide.
Okay, here we go. We're back to the spiral graph. Thank God. About Bitcoin
Hey,
spiral
the people
graph.
love the spiral graph.
If you bought every halving event, you would never have lost money by the time of the next halving. Okay, and that's fair. Like at the moment, you know, the way that the halvings work, I assume most of you guys know, every 4 years approximately, the the block reward halves. So miners earn half as much for the same amount of work. There's also the fees involved, but at the moment the fees are mostly negligible, especially at the moment where, you know, the fees are so cheap to put something in a block because there's just not that many transactions going through. But for this mining thing to sort of maintain, therefore, the price of Bitcoin needs to double every 4 years, right? So we're halving the reward every 4 years, so the price needs to double for miners to kind of, you know, keep doing their thing with the assumption that electricity stays the same price, etc. Yeah, so I think that's kind of, you know, if you bought at the halving and weren't profitable by the next halving, that's a bad signal. Like it's not. I don't think it's good that we're not. I don't think it's good that everyone's in profit from this. I think it'd be more that it'd be shocking if they weren't, kind of thing. That's my take on it.
Well, Skynet's having none of it. The spiral graph is the dumbest thing ever. It's astrology for investors.
Well, we love astrology for investors on this
Well,
show.
that's technical
so-
analysis. Is astrology
Yeah,
for men?
Yeah.
We also remind someone that we've got people in the chat asking Skynet for tips about prices. Can we just extend our not financial advice to the chat section?
Well, let's put it this way: we do not represent Skynet. So if he decides to give price tips and, you know, buy this token, buy this new token called Skynet, yeah, that's nothing to do with us.
The Moonshot Dispatch.
Yeah.
Well, when Moonshot Dispatch fan coin.
Yeah, that's true. We should monetize this baby. There is a thing like, what's that?
Coin? I'm pretty sure that's taken.
No, there's a platform. I can't remember what it is now. We've talked about it like maybe 6 months ago, where you, oh gosh, this is going to annoy me. So you basically, everything you put out gets a token issued on that article or podcast or whatever it is, and then people can buy and sell to own a part of that, you know, bit of collateral that you've put out. And then it becomes like this, you know, this market, and the more people watch it, they earn tokens, and like it's a whole thing. It's actually been done. I can't remember what it's called, but yeah, it's pretty interesting.
I believe we are straying into the world of RWAs.
Oh yeah. Well, then you might be ready for my next image.
Segue. So some of the news this week. There is some movements locally with the RBA going all in on RWAs. All in.
Balls deep.
They are full-fledged crypto bros. You're going to rock into a board meeting and no one's going to be wearing pants, just shorts.
Yeah.
You know, true crypto
There's
style.
going to be a bunch of crypto punks. They're not going to have their real heads on these things.
Correct. Yeah, correct. So Assistant Governor Brad Jones has come out, and so this is talking about Project Acacia, which is a personal interest of mine.
Okay.
And I had a chat with the good guys over at Red Belly Networks, and we had Tim Bass on the podcast recently, which is a shameless plug to go and listen to that. But basically, he says, these are his words, not mine, we no longer see the main question as whether tokenisation has a future in Australia's financial system, but rather how. Powerful words. So Jones has said that the RBA will partner with industry groups. In fact, they have been, and they have been producing a financial market infrastructure sandbox, which is also known as Project Acacia, which is probably the most extensive study in terms of modernising Australia's financial infrastructure. That's a mouthful, but there is a lot to it. Would you like to know more?
Sure.
Well, all right. I prepared some notes on my normally sized paper.
Yeah, that is tiny.
Are you interested? What are you particularly interested in?
Listen, what are my notes from this? Okay. Yeah, for me, it just seems like they're fully serious about it.
Yeah, absolutely.
Like they're not. This is not a hey, we should be investigating this thing. This is a we're going to do something.
Correct.
Because, like, whether we like it or not, this thing is happening.
Yeah, there's some genuine economic imperatives now that probably weren't around, 18 months ago, right? So you've got the Bank of England, you've got the MAS out of Singapore, the Bank of International Settlements that are now actively experimenting with using this to modernise their financial market infrastructure. And Australia's like, you know what, we have to do this. And if you kind of run through the objectives of things like Project Acacia and what it can deliver, like it's hard to argue that you shouldn't be pursuing this. Now, let me run through a few of the things. For example, if you just take off the headline stuff around settlement efficiency and risk reduction, right? Mm-hmm. So currently you have a T+2 delay, right? And counterparty risk. We can move to a tokenized version where we have atomic settlement. So counterparty risk, settlement risk, merged into one, right? And efficiency just in terms of the automation of this. So you've taken out a bunch of risk there and gained operational efficiencies. And kind of interesting, it's not like this is the first time, I guess, the powers that be are looking at this. In fact, there has been some work done previously. There was Project Atom, as I found out, and Project Dunbar, which are both have both taken place. Project Atom was, looking at modernisation of financial infrastructure in 2021. And Project Dunbar was about for the Bank of International Settlement was looking at cross-border use of CBDCs. Okay, so this is actually Project Acacia, which is probably the most comprehensive and most, some names, just to drop a few names of who's been involved. Is obviously the Australian Bond Exchange, the big four banks, so ANZ, Westpac, CBA have all been involved. Not to mention, I guess, some crypto household names like Fireblocks, Cantina Digital has been involved. So there's been, a number of participants across the industry and TradFi and crypto which have come together to use real dollars to start transacting and tying some things together. Now, I believe that the results of Project Acacia are due to be handed down relatively soon, April maybe. In fact, I feel like it's fairly imminent. I'm not sure if it's been delayed, but I know it's due to be handed. The results are due to be handed down soon. Which is fascinating, and which is part of the reason why we're talking about it, to get people thinking about, hey, there's this thing coming, and we're going to be talking about it a little more. Maybe, well, I'll be talking about it definitely a bit more. Whether you like to hear that or not is another thing. So how far have we gone so far? All right. So that's just, I guess, the high level, what it's about, and some of the potential of what it can do, which I think's, pretty cool. Yeah. It's going to be really interesting to see how this pans out.
Can I play devil's advocate for a second?
Sure.
Why blockchain? Why crypto at all? Why not just do what they're doing on a database? Like Independent Reserve has been exchanged for 12, 13 years now. And we do exactly that. Like we have atomic settlement. When you buy something, there's no settlement period, there's no clearing, there's no funding. It happens. The thing gets swapped and it's immediately available on your balance kind of thing. And we do that without blockchain. Right? Yep. We are obviously involved in blockchain, but that's just for sending and receiving. Internally, we just use a database. Why do you think that they need to use like a crypto or an RWA or whatever?
This is kind of across business as well. It's not like Independent Reserve is just one business and we're just doing it ourselves. This is reconciling differences between organisations as well.
So like an adversarial environment where
correct. Where mistakes could happen and there's better. And now, I guess on top of that, one of the I guess the real main advantage, and again, look, I'm not here to try and convince you of this necessarily, but I think it's fascinating that this is being taken seriously. Now, I think the big point of differentiation on this is the fact that the interbank trading and settlement is now also automated. So think about the automation of things like compliance and automation of things like coupon payments, right? All this type of stuff, right, can now be built into a conditional transactions. I think the smart contract element to it adds a level of risk management that just wasn't there before. And now, if you have this infrastructure which is stable and able to handle these transactions in a more efficient and faster and more secure way, that reduces, I guess, systemic risk for the system overall. There you go. Is that
great answer? Great answer.
Yeah. Thank you, Nick.
So Skynet asks, I'd be interested to know for RWAs in Australia whether or not the stocks will be directly issued on chain, i.e. includes all legal rights, or will there be... Okay, this is the same. Skynet actually had this question last week when we were talking about the way NASDAQ works. Yeah, it's a good question. So, I mean, the RBA is just talking about this stuff at the moment, so I don't think we have any answers. I'd also be interested to know that. I would be kind of disappointed if it didn't infer all of the rights that the normal...
Yeah.
It's not really an RWA then, is it? You're just talking about a derivative. If you have some kind of representation of the stock or token or instrument, money market, whatever it is that you're doing on chain, and it doesn't actually confer all of the rights that the underlying physical does. But yeah, this is. I think I watched this space kind of thing. We have to wait and see.
Absolutely. And I do believe there has been a lot more work done on this, and we're probably just not quite. If we had like one of the compliance lawyers in here to talk about it, I'm sure they would have they would know this stuff a little bit maybe better than we do. At least as far as the legalities of it all is concerned, because it's not really a technology issue here. This is far more to do with just how securities laws is.
Yes, absolutely. Well, and what is available and possible under the current legislation, because we just don't, the legislation is racing hard to try and catch up, and a lot of it's just not available yet.
Yeah.
Skynet also says, I think if it was direct issued, you would need to KYC whitelist your address.
Yep.
So just to overlay this whole discussion about RWAs, this isn't something that you would have in a MetaMask address, right? It's not a retail product. This is all B2B and B2G, G2B, like government and business, and it's very much like backroom kind of stuff. We're not talking
These
about...
would be private permissioned KYC chains, like Red Belly is the kind of network it'd be a closed environment effectively.
Yeah. So it's not something that we like retail would get their hands on. It's the RBA is really, at the moment at least, only looking at stuff at a more corporate and sort of government kind of level.
So it'll be interesting to see how that pans out. So again, that is really just hopefully a relatively robust introduction into some topics that we'll sort of carry forward. If my memory serves, April was, I think, the month that report was due to be handed down,
right,
which is from tomorrow. So we'll see how we go. Now, institutional adoption. I don't know if this counts necessarily as institutional adoption, but some large news is that Australia's third largest superannuation fund, HostPlus, hopes to offer cryptocurrency through one of their product offerings. Knowing a little bit about superannuation, I guess, this was kind of also a little bit interesting from the fact that this will be the first time, I guess, a large industry super fund, or in fact large fund manager of any kind, I guess, gives people a chance to get direct access to crypto. And when I say direct access to crypto, it's direct through an ETF, I presume. So everyone, I know when this first came out, I was like, oh great, I'll be able to buy Bitcoin, and but just chill for a second. Yes, you will get exposure to Bitcoin, but you're not going to be able to have the benefits of self-custody. It's not like you're going on there and going to be able to send it to your private, private wallets and manage it and have some independent money. This is purely exposure to it. Now, I believe that this is not from HostPlus, but my reading of this situation is that if I'm a large industry fund, so large industry funds are basically public funds that everyone in Australia at least is compelled to contribute to, and they're 9%. These industry funds, by way of actually introduction, in the US they call them 401ks, for example, for any international viewers, well, American viewers, I guess. We know that your superannuation guarantee has to go into these super funds, and you kind of have to pick somewhere to them. These industry funds kind of sprung off the back of, any guesses? Industries. So HostPlus, the hospitality industry. So if you're a hospitality worker, you were kind of going, I don't know who to send my super fund. They're like, well, we choose HostPlus. Host being for hospitality, obviously. Now, that was great because these funds were just collecting more and more funds, and they just kept getting bigger and bigger, and there was forced contributions every month. But they brought in over the years the ability to move around. So it's kind of like, hey, just because you're with HostPlus and work in the hospitality industry doesn't mean you can't have a self-managed super fund. Doesn't mean you can't be with a bank, for example, for your super. So competition started heating up for these large superannuation funds. There was some, there was merger in the space and consolidation, yada, yada, yada. Now, right now, I guess they're sitting there going, they've always been fighting the banks, right? Going, hey, we're the good guys. You've seen the ads, right? They go, oh, no, lowest fees. But they're losing out because people are going, I don't care about your low fees. What about me being able to choose what I want to do with my money? They're getting a lot of competition from self-managed super funds, particularly younger members. Now, hang on, if I'm a superannuation fund, I'm thinking, who are my best customers? Like, there's the guys who have the large balances, but they're drawing down it, or the young people who have to be in my super fund for 30 years. right? And they're going to grow and I get to grow with them. Now, all of a sudden, they're seeing some competition because they're like, well, where's everyone taking their money to?
Yeah, right.
Self-managed super funds. And what are those younger people buying? Crypto.
Nice.
So I'm not saying this isn't a good thing from HostPlus. It's kind of interesting that they are now sort of getting with the times. But I also think part of this is like, oh, damn, we've got no choice now. We have to start offering these assets, else lose our customers to more flexible options.
This is like the whole, first they fight you. What is it? First they laugh at you, then they fight you, and then you win kind of thing.
Then you win,
Yes, we're kind of at the then you win stage where these guys are like, all right, fine.
Yeah. So I'd love to know. I'd love to know if they're genuinely the guys behind this are like going, yeah, we've been fighting for this. We really want this. We're all about new assets.
Yeah.
Or it's just a knee-jerk reaction going, crap, we're losing.
Yeah.
I don't know the answer. And I don't know if HostPlus checks out our podcast, so they're probably not going to answer.
Yeah, see if they get on the chat.
But yes.
AMP, so AMP did actually offer, like I think in 2024, they were the first to offer Bitcoin, like some kind of derivative product which I think Skynet might be talking about. Cash settled futures. But yeah, HostPlus so the thing with HostPlus, this HostPlus thing, like the direction is definitely good. I absolutely agree. But there's still a whole lot of stuff they need to do before this becomes a real thing. So they don't even have the regulatory approval to do this, so they can't do it right now. They would have to get the government to come in and write some new laws, basically, that allows them to, change this or add these new asset classes, I guess, to their portfolios. So and the HostPlus guys, there's a quote in the article actually that sort of says something along the lines of, we're long-term investors. If this takes us like 6-12 months, we don't care. We'll happily do it the right way. We'll do it the proper way. We'll get all the ticks and cross our T's and dot our I's, and we'll bring it on when it's appropriate. They're not in a rush. They're not. So it's less knee-jerky, I guess, from that aspect. Having said that, they might just be talking their own book, and that is their only option is to move slowly because they're such a big company and they don't.
Well, they are. Well, they're large and that they have to. Well, they are, and superannuation is a long-term investment. As I said before, like if you're in your early 30s, you've got, for most people, and again, I won't get into the details because it's up individually, circumstances are different, all that, but you're in it for 25, 30 years, right? So, I can understand why they're patient. And I guess if they're going to be, they're planning to be around for a long time because their members are going to presumably be around a long time.
I have respect for that, for their position, to be honest. Like, rushing into something doesn't fill me with the confidence that I want to keep my money with someone long term. I mean, I'm imagining most listeners are probably in SMSFs, to be honest, like for the exact reasons you've described. We watched TikTok and saw some influencer tell us to go and buy Bitcoin with our superannuation, and so we did that.
Yeah.
I've got a comment from Amy Rose who's watching. She wrote, first they ignore you, then they laugh at you, then they fight you, then you win.
I forgot about the ignore one.
We missed a step. Thank you, Amy Rose.
Yes, I knew there was a fourth one, but I'm just not very good at remembering. That's the fifth one.
Can we be friends?
I would have got, Alone Tonight has a question. Does IR have an AFSL? Do you think this upcoming requirement will knock out some of the smaller exchanges and the BTC only offerings in Australia? Would you like to take that one? Or?
You do first question, I go to the second question.
Okay, sure. Does IR have an AFSL? No, we do not have an AFSL. We are in the process of getting one. There is no AFSL for crypto for what we do. So any crypto company that currently has an AFSL, it'll be for something different. It'll be for some other financial license that they've gotten for some other aspect of their business, or that they've claimed that they're impendingly going to do, kind of thing. Or possibly they've bought another company with an AFSL, and now they can kind of say, hey, look, here's our AFSL number. But if you look up the AFSL number and see what actual licensing it provides, there's nothing to do with crypto because there's no AFSL crypto regime in Australia. So no, we don't have an AFSL. Yes, I believe the legislation coming up, or the stuff coming out of ASIC, means that we will need to have one, as will all exchanges. And so we're definitely working towards that. It's something we've been working with ASIC to get done for a long time now. So we've been telling them, hey, you need to build some kind of licensing regime for us. And so it looks like it's finally happening, and we're definitely, paying attention.
Yeah, absolutely. And yeah, we've been arguing for this for a long time. We have that license head of the MAS. And one of the things I think, that experience, not
You're talking about the Singapore licensing. Yeah?
I'm talking about the IR experience with having to run. So I'm going to answer the second question now, which is, do you think this upcoming requirement will knock out some of the small exchanges and BTC only offerings in Australia? And my answer is, well, it's the AFSL regime. A lot of people have wanted it. A lot of people have cheered it. It won't apply necessarily to everyone. There's a certain size and scope that you need to get to have it. Amy Rose, if you're listening, you're an expert on this, and you can feel free to chime in at any time. We'll cut straight to the comments. But I think a lot of the people I've been speaking to, and certainly our knowledge of having to deal in licensed environments, is that having a license, people are looking at this a little bit like almost like a bit of a silver bullet. This is purely my take. This is not an IR take. But hey, licensing regime will come in place. I'll go get licensed. We'll all get licenses. We'll all get bank accounts. Life's going to be great. Now, I just don't think it's going to be as simple as that, because, in essence, what is a licensing regime? It's to show that if you meet the requirements of that regime, that you're operating at a certain standard. So that's going to come with obligations and requirements on your business, particularly on the compliance side and process management and risk management side, to operate to a certain standard. That's a mouthful, but where am I getting to with all this is that I think, and I don't know this because I don't know how other exchanges operate, I don't know how the rest of the industry operates, the minutiae of their business, but there will be some people who go, great, I'm going to apply for a license. And then they're going to get some feedback, and some of that feedback may well be, you're not up to standard. And they're going to be like, shit, what do you mean? Dude, we've got standards here, and you're not meeting them. What else is there for me to explain? And they're going to be, oh, so I don't get a license, right? So that's my first concern, I would say, and I hope that, and I do, and really do. I do think most of the large Australian exchanges, I would assume that most of them would be able to have those requirements already in place and have already got the council and internal procedures around to have that. I assume they would. I'd be surprised if they didn't. But some of the smaller ones, I think, will struggle, because that is, that does require a lot more, expertise and cost to meet those standards. So that's the first thing. Now, the second thing would be, okay, post, people getting a license, some people will get it, some people won't. Then there'll be a second question of like, well, okay, what does this then mean? What are these ongoing costs? Does it necessarily, do I think everyone will somehow magically get banking with Big Four and great customer accounts because of this licensing regime? No. I don't think it's going to be a silver bullet where everybody necessarily, it's not, you know what I'm trying to say? It's going to come with, it's definitely going to come with increased expectations about operating standards and all that kind of stuff. It's definitely going to come with increased costs for compliance. And will the benefits necessarily flow into like directly for better banking or things like that? I don't know yet. We'll see. So that's my take on that. Amy Rose. Is this Amy Rose?
No, this is by Crypto Guide.
Oh, thank you, Crypto Guide.
Well, what a
yes,
shout out.
A shout out to you. Correct. 170 companies applied for a license in Singapore. Independent Reserve was the first to get one. And still to this day, only about a dozen businesses ended up receiving a license. Great point. Yes, thank you. That's I guess, that was a much more succinct way of saying what I was trying to say.
And I think it's actually an interesting point here. The question originally was, is it going to knock out a bunch of the smaller players and the Bitcoin only players? And I assume the purpose of saying Bitcoin only is because they're generally the smaller players as well. No shade on Bitcoin. I love Bitcoin. It's just how it is. And I think it was really interesting, or at least eye-opening in Singapore, when the licensing regime came out, and it didn't necessarily, I'm sure it did, but didn't sort of kick out the small players. It kicked out the big players. Like Binance applied, the biggest exchange in the world with so much resources, so much money to throw at this problem of getting a license, and they wanted to do it. They were like, "Yep, we're signing up." They, put their name down for it, and then eventually we're like, you know what? Actually, we're going to bail from Singapore.
Yeah, correct. Oh, interesting.
And,
right?
and it's not, and they're not the only big one either, right? There's other big ones in Singapore that just went away because they're like, this is too onerous on us.
And Skynet brings up a great point: is that financial licenses can give people a false sense of security, safety as well. I think it's better than having nothing, but at the same time, yes, all the people who created the GFC were licensed, which is very true. So I guess this whole licensing situation is far more nuanced, because it's not a magic bullet that makes everything hunky dory.
I mean, if it makes getting banking a bit easier, then it's hard to say it's a bad thing, because banking is so difficult for crypto exchanges, and even like, people who are in the crypto industry. Like, we know so many people have had their bank accounts shut down, not just from dealing with us, but from dealing with any crypto exchange. We see it happen all the time. And hopefully it's getting less and less of a problem as, banks are getting a bit more sophisticated and understand crypto a bit better. But if the AFSL does make it at least a little bit easier for us to prove to the banks that we're doing the right thing, that, if they looked deeper, if they actually spent some time looking at our processes, they would realize we do more than they do for like anti-fraud stuff kind of thing. Yep. I think that'd be a good thing, but this is all pipe dreams at the moment. We don't know how it's going to play out. Hopefully it does end up making things easier.
Great point. All right, thank you, Digital Economic Council, Amy Rose. We see you. Maybe. Well, we don't. Is it Amy Rose? It could be anyone. Quick comment just to share this. There are over 400 DCEs, so digital currency exchanges, crypto exchanges in Australia. Many are moving through licensing, and many will not. It is a process, and not all DCEs are the same. Yes. Yep. So it's going to be interesting. This is going to be interesting to watch. At least internally, maybe for our viewers, less so, but it will send part.
Yeah.
All right, so let's keep going with the news. I think we've got in the interest of time, we're going to get through about half of the stuff that we wanted to talk about today. So Nick, where would you like to go to first? The Clarity Act, compromise, take two?
Yeah, sure.
Or we're going to talk about the Morgan Stanley with the Bitcoin ETF, all the merchants, 4 million US merchants now receiving crypto. Which one do you want to do, Nick?
Well, Morgan Stanley is the top of my list, so
okay,
it makes it easier for me if that works for you. So Morgan Stanley, what are we talking about here? They've released a ETF. Why is this big news, you ask? Well, Morgan Stanley have been probably not as bad as Jamie Dimon and JP Morgan, but they have been not happy with crypto and they don't like it. Up until now, this is definitely they're getting dragged along kind of moment. This is not there's a bunch of guys there who really love crypto and they've finally got it in. So these guys have launched an ETF. But they've decided to do it, I'm going to say, properly, in that this isn't just like a half-assed attempt. They're going to like shelve off to the side and say, oh, no, we've got, an ETF offering for, Bitcoin or whatever. They've come in really hot and basically said, we're going to charge, 14 bips which is 0.14%. They're charging for the management fee for this ETF. Why is that important? The previously most cheap ETF was Grayscale's mini BTC ETF, which was 15 bips. So they've undercut them by 1 bip, 0.01%, sorry. And the biggest one in the world, BlackRock, sorry, I'm sitting there thinking Larry. So it's definitely not Larry.
Biggest
Larry
ETF.
runs it. Yeah, the biggest ETF from Larry Fink is BlackRock's IBIT ETF, and they run at something like, 0.25, I think. 0.25% is their management fee. So it's well below both of these, and they're now the cheapest ETF. When it comes out, I think it's still getting listed and organised. But yeah, so they're going for it. They're not just putting it out there to make sure that they have an offering in the background. They're really going for it. They've got something like, 16,000 advisors or something that they've got, or 14,000 advisors. So they've got a lot of advisors here who are now basically incentivized to say, hey, to their clients, you need to use this. If you want to get crypto exposure, use ours because it's the cheapest, and we're Morgan Stanley, we know what we're doing. Interestingly as well, I think Morgan Stanley are not just doing this. There's a bunch of other things they're doing. So they're also releasing a Solana ETF. They're also releasing a staked Ether, like Ethereum ETF. What else are they doing? They've applied for the National Trust Banking Charter, which is something we spoke about last week. So that's the thing where banks can get this sort of new license that allows them to custody crypto. So they're going for it.
Yeah.
Like they're really, they want to be a custody. They're the first bank to do an ETF, I believe. So the other guys that have all done ETFs are sort of ETF companies kind of thing. They're not actual banks, but so these guys are putting it out there. And I think that's, this is a kind of story we've been speaking about for months now, right? Like every time you turn around, someone else is relenting and going, all right, fine, we'll do it.
It's a real thing.
Yeah, it's a real thing. It's not a full scam anymore. And so, this is just good news.
Yeah, I guess the question in my mind is like going, so do you think this new Morgan Stanley is going to attract funds really? And is it going to compete with the dominance of the IBIT ETF?
Well, they're undercutting their competition, so.
Yeah. Look, I think, these products, when I say products, they're effectively, they're just financial products. And the question is, how well can you distribute these products? How much shelf space can you get? And so people like Morgan Stanley and BlackRock obviously have large networks of advisors they can distribute this product through. And so I think you touched on it there. I mean, they have 16,000 financial advisors, which are going great. You know, this one's cheaper, it's the same product. I've got access to it. If my customers want it, they've got a big distribution channel. So how much of that 6.2 trillion will it soak up through that organic sort of Morgan Stanley advisor network?
We're hoping all of it.
Plus, plus some more. So it seems like it's ridge ditch. It's got some legs potentially.
Yeah, I've heard Morgan Stanley's kind of described as, you know, a real concentration of boomer money. So,
but aren't all the old investment banks?
yeah, I guess so. But I mean,
XRP.
maybe they'll invest in it. They should have done an XRP ETF. They probably would have done pretty well. But yeah, I think there's a lot of money there. Hopefully, people often talk about how Bitcoin and anyone who's a digital native who's kind of grown up with this stuff finds it much more comfortable and easy to invest in digital assets. And it's the old guys, the people like the boomer generation, who usually are a bit more like, look, this is not my bag. I don't understand it. I'm going to, buy properties and invest in BHP or whatever. And this is sort of just another way to get those guys maybe a bit more interested. Just reduce the friction, reduce the barrier to entry, and I feel like a bunch of people who are probably mega rich are getting advised by guys who are now saying, look, there's no reason we can't invest in Bitcoin now. It's easy and we can get in and out if we want.
What I would do is watch the Morgan Stanley analysts, right? So the advisors follow the analysts, and at what point do the analysts start suggesting an allocation towards Bitcoin?
Well, apparently, I think Morgan Stanley already suggests 4 to 5%.
And where's that money going to be?
Yeah, I don't know. And again, I don't understand how it works. I've never dealt with Morgan Stanley, but I guess it's up until now, it's probably a bit more difficult and there's hoops to jump through. But if their suggestion has long been 4 to 5%, and now they've opened this door which says, look, you don't even have to do anything. I just push a button and it's
correct.
Like,
well, that's what's going to happen. It effectively becomes easy for them to buy Bitcoin as it does any other asset that they're already in a well conditioned to buying and selling. That's their job.
Yeah.
Interesting.
I think it's general good news. I don't think we're going to see any crazy pumps because of this thing.
No.
But it's just more buy pressure.
I mean, if this news had to come out maybe in 2022, for example, or 2023, when we're getting the whole ETF, institutions are coming, buzz on.
You know what? It would have been. I'm not sure if it would have changed much because I feel like maybe it just diluted the existing, pool of people who could buy into the ETF. I wonder. But I mean, it's good to just have these new sort of boomer level banks that have shitload of money just continuously coming on board, coming online kind of thing. And
correct.
Yeah, I think that's good.
More networks.
There was more to talk about. So, was it Franklin Templeton are now also offering a bunch of stuff. These guys are like crypto natives.
They're crypto natives. They've been around.
Love it.
They love it. Yeah.
I think they were even like
they were deep into it before
sponsoring like Bitcoin devs and stuff like that.
Yeah.
They were.
I was on a panel one time with the guys from Franklin Templeton back in like 2022, and the guys then they were deep in the weeds at that point. Right. Then. So they've been building capacity for at least half a decade.
So they're offering ETNs, which is like an exchange traded note, like it's a debt note. So it's not the same as an ETF, which is I'm not a super expert on this stuff either, but like there's not much I'm an expert on, to be honest. But from what I understand, like an ETF versus an ETN, an ETF you kind of have a like you own the underlying basically. So an ETF has got the underlying asset, whereas an ETN is more like a debt promise, like a debt note, where you're promised, we've got this for you. And the problem there is that if the issuing company goes under, if it's an ETF, you're kind of safe-ish, like you've got a stake for the underlying. But an ETN, do you know about this stuff? Am I saying it right? This with an ETN, you get in the line with all the creditors basically, and you hope for the best kind of thing. So it's interesting that they've decided to do ETNs. Maybe there's less regulation or something. It's easy to package weird kind of assets in an ETN than it is in an ETF, and maybe less onerous for the company doing it. But yeah, they've done this. Is that Franklin Templeton? No, maybe not. So Franklin Templeton No, sorry, that's not Franklin Templeton. Sorry.
Forget
Franklin.
everything.
Yeah, someone else is doing that bit. I can't remember who now, which is it might be actually Morgan Stanley. Anyway, I'm going to keep saying lies on this podcast until I get something right. So Franklin Templeton are offering their ETFs in a tokenized format.
Oh,
So
that's
this is
right.
like,
Yeah.
more RWA chat. So yeah, you can kind of get this stuff on chain, and that's totally unsurprising to me. They've, as we talked about before, they're real degens over there.
To make it a little more conceptual, I'm going to pick up on a comment here from Skynet, who we talked about the changes in the boom mindset. Now, if you look at it just from a broad picture, even Australia, the US, right, the boomers still have all the brass, right? If you look at the concentration of wealth, it is like 60, it's not even 60, it's probably 65, maybe even 70 plus. Like that cohort that went through, they've got all the money and everyone else just has debt and some like worthless NFTs, depending on how young you get. You know, or in Jared's case, a bag full of Cardano. But
Heavy bag.
My kids.
it's heavy bag. Good luck to
your
the
problem
future
now.
generation.
I've got a bag of shit for you.
Hopefully the young kids, I don't know, maybe they'll get like a jerry can full of petrol and that'll be
just want
wealth.
wealth.
You know what? I mean, the jerry can thing, hey, look, it's like Mad Max, right? This is Mad Max. Whoever wrote Mad Max just knew exactly what was happening. Like, people are going to be driving around with like the interceptors, whatever. I won't go down the Mad Max route. What I was trying to get to was Skynet's comment about progress. Said you can't really change. I love this comment. So you can't really change boomer mindset. It was set in stone decades ago. Now, I don't know about this, but maybe we can do a little bit of research on Planck's principle, which the idea is progress is made one death at a time.
Dark.
Is it Planck's constant, or is it something different?
Planck's constant is something else.
That's
No shade on boomers. We will all be boomers one day. Well, no, technically the generation doesn't follow you. You don't move through generations as you get older. But I get the point. We'll all be as old as boomers are now one day, and our habits will lock in resistance. Absolutely. Now, this is something on a personal level. I not struggle, but I'm conscious of every day. Is that I don't want to fall into a mindset where I'm stuck and I'm only listening to the same, 50 songs that I enjoyed when I was in my 20s, and I'm like, not learning anything new. And being in this industry, like I've always been sort of in technology industry, which is kind of the same, in crypto, and I'm obviously in it for the tech. So I'm always learning new stuff. I really hope not to get locked in and not to learn about the new changes and stuff. Like AI is just fascinating at the moment, and it's almost things are changing too fast, but. Yeah, hopefully all of you out there can. Well, I mean, the reason if you're here, you're probably wailing against the same machine that I am, and doing your best not to get stuck in the old ways of doing things, because new ways are awesome, and it's just it's a matter of time before you get lost.
Yeah, it is interesting though. For example, I know most people's music taste gets sort of, I guess, crystallized like in high school or whatever, because after they leave high school they stop listening to music, so they kind of, that's just you ask someone what kind of music they're into and they tell you, bands from the 90s are still cool, aren't they?
Yeah, George Michael.
I'm probably the opposite though. Like, I will follow the genres that I liked in my 20s, but I'm still listening to bands today. I need stimulation.
Yeah, no. There's nothing more satisfying than listening to your favourite songs from yesteryear, but I think you just have to get out of your comfort zone and challenge yourself a bit. I try and do that. We've got a new word for the aged. Yeah, unk.
Oh yeah, no, I'm aware of this one.
Yeah, no,
No,
you're
you're-
an unk.
No, you're definitely.
And
an
you got
unk.
your hat on backwards.
Definitely
Yeah,
an
how
unk.
can you be an unk?
No, definitely. Well, we had like a G who comes along sometimes, and she was our modern generation consultant who would teach us words from the current vernacular and translating it into unk language, which I guess is everyone. And I was like, look, anyone over 30 is an unk. I mean, 40 to 6 is generous.
Is 30 plus unk?
Yeah, to the 19-year-olds, 100%. Yeah.
Yeah. Now I think don't quote me on this, but I believe the boomers are kind of 1945 through to the late 60s or mid 60s. So
Something
it's
like that.
20 years,
Yeah.
right? So that's
Yeah, the boomer generation after the war. So there was this everyone's suddenly having babies because the war's over and times are good.
yeah. So
Yeah.
I think even people now plus 60 are kind of past. The boomers are now 64, right?
I mean,
My
that's
parents are 62, so
just boomer. Yeah.
Yeah, just boomers are 60 plus.
boomer.
Yeah.
Thank you, Amy Rose. Yeah. So now you're comfortably slipping into your unk phase.
Yes. No, yeah. And the problem is you can stay as up to date as you like and know every single word, and like every time you hear the numbers 6 and 7 together, you're like, you're on it. But it doesn't matter because you got like a slight grey in your hair. You're like, no, it doesn't. You just sound like you're trying too hard.
You're trying too hard.
Same for fashion. Are all millennials still wearing like skate wear from the early 90s?
Millennials.
Late 90s, early 2000s?
Am I a millennial? I am, right?
Yeah.
Gen Z.
80,
Gen Y.
Like early 80s.
You'd be Gen Y.
Yeah.
Oh no,
Gen
Gen
Y.
Y, Gen Y. I'm Gen Y. Yeah, which is millennial, I think.
Millennial,
That's the
yeah.
same thing, right? Yeah.
80 to 95.
Yeah, I don't know, like, UV in our office, like if you want to look for the, whatever the latest fashion is, you just have to see what he's wearing, basically. But yeah, I don't know. I'm wearing jeans and a t-shirt, I suppose. But I feel like anyone can wear jeans and a t-shirt.
Still
Like,
cargo shorts and a t-shirt.
yeah,
Age 15 to today.
cargo shorts.
Cargo shorts
are
and some
kind
New
of
Balance.
generational.
Oh, New Balance is making a comeback, Jared.
No.
You got the Nikes. Yeah.
Oh, anyway. We've been running for a bit over an hour, and we've got more to go.
Yeah, we've got more.
Every time I say that, we've
What
still got like
is-
15
what
minutes
is
to go.
the Ethereum economic zone. I think that would be very important to cover.
This sounds like a Nick question.
When I first read it, I was like, "What is this? The new version of the banana zone?" Because that was another like stock to flow thing where everyone's like,
Yeah.
"Yeah, it's banana zone time, guys."
Well, I was going to ask you,
But it's not.
how would the Ethereum economic zone make roll-ups feel more unified? But I feel like that's
There's a lot of
pretty.
context there.
There's a
that-
need a bit of context.
Yeah.
Like, let's start with what is the Ethereum economic
Yeah,
zone?
what is economic zones? All right, Unc, let me lay it down to you, yo.
Explain, Maxine.
Yeah. Yeah. So Ethereum economic zone has been thought up by these two guys. One of them is from Gnosis chain, and one of them is from some other thing, which I can't remember. You've got the notes in front of you. No, not that page.
Would you like my notes, Nick? That I
Oh, it's right there.
There you go.
Yeah, nice. Yeah, Zisk. Unsurprisingly, I didn't remember it. Zisk, something I've never heard of. So these two guys, co-founders from Gnosis and Zisk, came together and said, we need to build this thing to make layer 2s on Ethereum better. And they came up with this idea called the Ethereum Economic Zone, EASE for short. And the idea is it sort of makes layer 2s and the layer 1 kind of interact better. Interestingly, the Ethereum Foundation has got behind it and they said, yeah, we'll bankroll this thing.
right.
Pump some money behind it, get it up and running because it's a good idea. The idea of this thing basically is a sort of a framework for when you're building an L2 to make it interact with the L1 and I suppose like other L2s as well in the economic zone much easier. So at a high level, and I haven't looked super deep into the thing, but at a high level, basically it will allow like a layer 2 that has been developed in this Ethereum economic zone structure. It can access smart contracts on the main layer and any other layer 2 in this framework. So instead of having to do bridging of funds across and wait and you have to rely on third-party bridge usually and blah, 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 risk and you can they can just call things directly, which makes things so much smoother,
easier. Yeah.
so much easier. It just, suddenly the liquidity on both chains is available to anyone. And so it sounds like a really cool idea.
And that would make the user experience a lot for us unks out there.
Yeah, I barely know how to use my mouse to click. And so this thing is going to make it easier when I tell my AI to do some investing for me. It's going to do a lot. The caveat to all of this is, it's a cool idea, but someone needs to build it. And any layer 2 that already exists needs to go, you know what, we're going to pivot, change our entire thing. Like it's not a simple flick, like a switch that they flick on and off. They have to do a bunch of work to get this involved. And from the beginning, like if you're building a new layer 2, you can build it, using this structure, this framework. But it's not as easy as it sounds, although it does sound like a great idea. It's something we might see, a couple of years down the track, and we might see, layer networks starting to use this thing.
Stay tuned. Maybe it'll become a thing.
Yeah, hopefully. I mean, it's like as you say, if it makes life easier, I'm all for it. I assume there's some downsides and caveats to this thing. It's probably not just going to be all upside, because life's never that simple. But we'll have to find out.
Now, Nick, we still have some charts of yours to get through.
Oh, do we? Oh, yeah. So the RWA chart. This is This is something we've already spoken about this one, but I thought it was an interesting chart to put up. You guys can have a look in 3, 2, 1.
There it is.
There it is. So this chart is a sort of chart of RWA usage from a friendly site called rwa.xyz. Jared's just making it a bit bigger. Just nice covering.
Perfect.
Yeah. So
Yeah, you can't see what I'm doing behind you.
This chart here. Yeah, we can still see down here. Yeah, so basically, I just thought it was quite interesting. Like, look at, like, you know, we're in a bear market for Bitcoin and definitely for the wider crypto space. And look at what RWAs have been doing over the past. This is maybe like a 2-3 year chart sort of thing. They have been in up-only mode. Imagine you could somehow invest in like the RWA space. You'd be laughing right now. It's just non-stop. Anyway, do what you will with this graph. I think it's interesting, and we've been speaking about RWAs for a while. People seem to be doing a lot of stuff with it. What was the one we were talking about the other day? Block? No, not Block. I can't remember, but there's some company like Nasdaq were doing something, and then there was some other.
Or the one of them?
Yeah, X stocks. Yeah. So X stocks are like they're really doing this traditional finance crypto world bridge using RWAs. Sorry if that was off camera. I was doing this. This the integration sign. Yeah, I don't know. I thought it was just interesting. Keep an eye on it. The end. Oh yes, this is the last one. So last week we spoke about.
You cannot get away from it, Nick, because the internet wants to know.
Well, yeah. So we talked about my porn history for some reason. Anyway, I did a search, and as you can see in the screenshot here, which I provided to Jared. Anyway, I think that just puts that to bed. We can probably don't have to talk about it anymore.
That's proof.
Yeah. I mean, it is actually alive. Should we? Yeah. Let's not do it on your laptop. Yeah. Okay.
I'm glad that's resolved, Nick, because the internet wanted to know.
Yeah.
They
The internet comprised mainly of my wife.
Thank you. Well, all right. On that note, Jared, thank you for coming in today. We almost lost Jared today. He almost died on us. He's been... So run us through food poisoning, general sickness,
Flu,
AEDT, bags.
Yeah.
Cardano?
Yeah, Cardano.
You survived it all.
When will this end?
Yeah, that's another disability.
No, you're like, you know what? I watched the most recent...
And the Dragons are doing well as well.
Oh, yeah, your favourite footy teams, they're killing it. I watched the remake of The Crow last night,
Oh yeah.
which is... I don't know if I liked it better or worse than the old one.
Yeah. Okay.
I haven't watched the old one for a while, so
Yeah.
I need a side-by-side comparison. Well, he doesn't die. That's the thing. You're the Crow, Jared.
Yeah, that was a great movie. It's quite dry from memory, but I used to watch the there was this TV series like 20 odd years ago of The Crow as well.
Is it? I didn't see it.
Yeah, there's a different actor obviously, but yeah, I enjoyed that. Like that was fun watching for me. But I remember watching the actual movie The Crow, and that was a little bit more tough to get through.
Yeah,
A
it's
bit
pretty
more
dark.
gritty. Yeah,
It's gritty. Yeah.
but no, I love the concept. It's a cool concept.
All right. Well, thank you. Well, next week, actually, we will not be back because Nick, school holidays is about to be on us, and you're off for a couple of weeks of leave.
Yes.
Enjoy that.
Yeah. So we'll see you
Yeah.
guys in 3 weeks, I guess.
Which is also
The week I'm away.
exactly a year we've been starting this.
All right.
April
Oh, yes.
11th was the first ever Moonshot.
No
So
way.
we'll have a birthday celebration when we get back.
Well, you're not. So are we away for 4 weeks then? Are you away the week after?
We'll let you know on the interwebs,
We'll
but
man it somehow.
we'll man it somehow. But we will celebrate, even if you have to wait a little bit longer for our official year-long anniversary special. We'll do something good for it.
Do you want to dial in?
Me? I'm here for it. I
No,
know.
on your weeks off.
We can,
Man, we can try.
we'll work it
go
out.
if you want.
The point is, when we come back, we'll do something. We don't know what it is yet, but we'll do something good. All right.
Yeah.
What is that? I don't know yet. I haven't thought of it. I just agreed that
You're
we'll
making
think about
promises
doing
that you
something. All right.
Can't live
But
up
we will
to.
do something, and it'll be epic. I don't know. Maybe you can get your wizard
Epic,
costume
come
back on.
Yeah.
I don't know.
We'll do something. I'm happy to agree to that. It being epic might be a bit too much. But anyway.
All right. Well, thank you for stopping by. We will be away for the next 2 weeks, and conjecture about
Or will we?
how epic will it be when we come back.
Yeah. I mean, maybe we'll, as Jared said, we'll have a think about seeing. Oh, my laptop's broken. Could be interesting. Yeah. So maybe not. Anyway, we'll find out.
Thank you, Amy Rose. Thank you, Skynet. Thank you for dropping by. And some love from the audience this week saying thanks for the show.
Yeah.
We will be back at some point. Thank you very much for stopping by. We love you all. Bye-bye.
See ya.
Lee and Nick with the